Hello everyone, good morning. Welcome to today's morning report of chart videos on Monday the 21st of November with me, Richard Perry, market analyst at Handtech Markets. European trading session's got off to a mixed start really. It's sort of been up and down. It's been sort of turning around the flat line. It started up, then went lower. It's now just bounced higher again. It's sort of mixed sentiment really, and it's coming as this dollar has started to sort of consolidate slightly. It's not really continued the run higher today. That run higher that we saw in the last 2 weeks has just come off the top slightly, and that's come as Treasury yields have just consolidated a touch today. The 2 years basically flat. The 10-year is also basically flat, mildly lower. So sort of mildly retrenching on the risk appetite. But it's difficult to see exactly whether this is going to be the beginning of a profit-taking phase, or is it just a little pause in the big strong dollar bull run which we've got at the moment. So a bit of uncertainty going on. That's why I think equity markets are fluctuating around, and also the currency markets as well. Although there is, as I said, a mild dollar strengthening as the euro has picked up slightly, 0.3% up on the euro, slight yen strengthening as well. So there is a sort of corrective element to the dollar move today, but as yet nothing concrete in terms of the direction whether it's going to go. I think it's a bit of a Monday trading really. It's not really a great deal in terms of the economic calendar today. Just Draghi speaking at 4 o'clock this afternoon. We have had the improvement in the oil price. Actually, if I just get that chart back up, improvement in the oil price. You had a decent run into the close on Friday, and that sort of continued early today, and that sort of come as not only the dollar has started to correct slightly, but also the sort of noises out from OPEC with beginning again. We've sort of got, what's it, the 21st today, the 30th of November is when we're going to get that OPEC meeting, the biannual meeting, and there's going to be a whole load of news-driven trading, I think, for oil in the run-up to that meeting. Anything surrounding production agreements and cuts and etc. etc. So and it's going to be a bit more of a choppy phase, I think, for oil going forward. But at the moment, oil's picked up today about 1.5%, as the market has reacted to this news over the weekend that Iran is likely to be given sort of a bit of a dispensation in terms of production cuts. So we have got that oil price pushing higher, which again has sort of added to an element of improved risk appetite today, but nothing significant that equity markets are holding on to yet. So that takes me to my chart of the day, which is the Kiwi dollar. And the dollar generally, the US dollar, has been strengthening, and that's sort of reflected on this chart, and you can see that strengthening of the dollar has broken through this uptrend channel, the bottom of this uptrend channel, arguably sort of the break below this reaction low here at 70.60, I think, no, 70.30, sorry. You could even argue that completed a top pattern, but to be honest, I think the big emphasis will be on this support at 69.50, which sort of tested a few times in June and July, and if that were to break to the downside, that is the confirmation of a really strong, I think, bear move. So the Kiwi dollar is at risk of this big breakdown. The Aussie dollar has had a pretty poor run of it recently, so whether the Kiwi follows that one lower, it remains to be seen, but certainly the pressure is still on. You had an initial sort of pop to the upside today. That's just sort of come off in the last hour or so. Look at these momentum indicators, negatively configured, but also with downside potential still on the RSI. Stochastics falling in negative territory, D-lines falling. It's all looking still fairly negative, and little rallies that you get on an intraday basis keep getting sold into. So that's what you've had in the last few days, where you've had these sort of mini recoveries. 71.10 on Thursday's high, 70.60 as Friday's high. So today's high, 70.35, is initial resistance as that move has just come off the top, but you can see the overhead supply that continues to come in. The old lows back from a couple, sort of beginning of last week, then became the base of resistance on Friday. So there is an element of this sort of old support becoming new resistance, and again that seems to be coming in. 71.30 was Wednesday's low, and is now acting as today's high. So there is that element of trading at the moment, so little rallies are getting sold into as the sort of overhead supply of of traders start to sort of come back in and just sort of use this unwinding move on the MACD lines back towards 60. Again seems to be taken advantage of. Stochastics on the hourly again crossing lower, MACD lines seemingly sort of ready to cross lower under neutral. So these are all sort of selling into strength indicators, and certainly it looks like a test of that 69.80 initial support, but obviously 69.50 is the big low that the market needs to hold on to. If that goes, you're sort of back towards these lows of May, 66.80 level. But that is interesting. So it seems to be that rallies. Sorry, I'll just mention it once more. Or mention the 144-day moving average. Look at how many times it's been used as a basis of support, key support, and then turned over, and has since sort of now performing the function of the overhead resistance around about where that old uptrend channel support came in. So that is a big resistance overhead at, if I get my crosshair on it, again around that sort of 71.10 level. So I wish you good luck in your trading today, and I will speak to you later. Thank you.